Hey there, everyone. Dave Keller here with Market Misbehavior. There's no denying the market has been showing some serious weakness here in mid-March of 2026. In fact, the S&P trading below its 200-day moving average for the first time since May of 2025. What does that mean for stock pickers? Here's what I've found, right? When we're going into a period where market conditions seem dire and the broad indexes are struggling, there's kind of three ways you can start to identify potential opportunities at the individual stock level. Number one, stocks continuing to be in an uptrend despite market weakness. Number two, stocks just starting to break out on better volume, indicating that there's some buyers somewhere pushing that price higher. Third would be strong earners. These are the companies potentially well positioned to weather a period of market instability because they're just, they have decent earnings growth and earnings momentum. Today we're going to use a platform I've been testing called EPS Momentum to highlight names, a couple names in each of those different buckets. I'll show you how I identified these and give you some ideas of how you can do it on your own. So first we're going to look for, what's called timing momentum on this platform. So, basically we're looking for stocks that are continuing to show strength. Now I'm limiting this to the top 500 companies out there just to kind of give us a good working list. So this is basically the large mega cap names in the US. And if you can glance through this little summary, we're basically looking for stocks in an established uptrend. As we glance down this list, right, which stocks are showing positive timing momentum? It's a lot of energy. I'm not surprised, right? I mean, if we look at charts like Occidental or Marathon, they're probably going to be in pretty strong uptrend phases. I'm going to look at some of the non-energy ones because I think those are the ones that might be a little more interesting to look at. Western Dig comes up, right? Western Digital. Now, Western Digital, other technology names pulling back here on Friday, March 20th, as many things are, but the primary trend appears to remain pretty strong, right? Western Digital and Seagate are the two kind of key storage names in technology. They've kind of bucked the larger trend of weakness in the technology sector. We can see WDC is really threatening and arguably, confirming a breakout or attempting to confirm a breakout above $300 a share. We got a foothold above there on Tuesday of this week, and we'll see if it continues to hold. At the bottom here, this is the basically the timing momentum model that's here on EPS Momentum. We can see 5 different items: trend, price momentum slope, relative market rate slope. So that's actually looking at relative performance. Power days, which we'll get to because that's how we're going to identify some stocks just starting to break out. And then looking at the exponential moving averages and making sure that the moving averages are confirming an uptrend phase. Overall, I would say out of the technology sector, right? I mean, while there's a lot of stocks that are kind of struggling, I'm impressed by names like WDC that are continuing to show technical strength, what we'd call timing momentum here on this platform. LYB is in the materials sectors. This is another one, again, sort of outside of energy that's still in a primary uptrend. We can see green across the board using the timing momentum model, but just a simple analysis of the price confirms kind of Charles Dow's classic assessment of how you define a stock in an uptrend, right? And an uptrend is a pattern of higher highs and higher lows. And even though materials as a sector has certainly been struggling here in March of 2026, particularly some of the mining stocks, right? Things like Newmont, Freeport, and others really rotating lower. LYB stands out as a positive outlier because it's in a positive trend. There's also this little summary widget, which I really like, called the advanced quote, where it shows you in kind of bright red or green. Here's earnings, here's trend, and we can see trend up. We can see sort of all the different components of the timing momentum model in the green. And so for me, that's one of those basic checks just to make sure, is the momentum strong? It is. Now we have to look at an energy stock because most of these names here are energy names. And I should make a point, by the way, I'm looking at the top 500, but if you're looking for ideas, given what's happening with the S&P names, you probably want to look at a larger group like large and mid caps or liquid US, which just gives you a good working list to start with. I'm going with the top 500, just so we have names that I'm pretty sure we're all going to be familiar with. Here's what Phillips 66 looks like, and this is, I think, representative of a lot of different energy stocks right about now. Obviously, the strength in crude oil prices is propelling a lot of these names to the upside. And again, it passes the timing check because it's green across the board with these different factors as part of the timing model. all confirming a period of strength. For me, I mean, simplistically, we're making a classic Dow theory uptrend of higher highs and higher lows. So it's refreshing that even in the S&P 500, where the indexes themselves appear to be breaking down, where a lot of the previous leadership is struggling, there still are names out there that are doing well. I always sign off my market recap show saying it's always a good time to own good charts. So I think that's a great reminder that there are charts that are still working out there. There's a little P that you see on this chart, which represents a power day. So their model at EPS Momentum actually looks for big price moves on above average volume. And that's sort of, is how I would summarize what a power day represents. So we can actually go here and look for stocks showing power days. And there's not a ton in the S&P 500. If you want to find a bunch of them, you have to go into a different universe, maybe look at a large and mid cap universe or even small caps. But I do want to highlight OKE. Oniak is one of the pipeline companies. So this is basically an infrastructure name, right, within the energy sector. One of those companies that kind of gets the stuff you need out to you as a consumer. Interesting, right? So a power day basically represents a larger than average move on larger than average volume. Looking for that price volume relationship. This is actually foundational in the technical analysis literature, right? If you read the classic books by John Murphy or Martin Pring, or even like the Edwards and McGee, what's called the Bible of Technical Analysis, they'll often talk about volume as an important confirmation. Price moves without a lack of volume support, you should be skeptical of those. Price moves confirmed by greater volume, those should be, are essentially validated. So the fact that we have these power days here for the last couple sessions, so on Thursday and Friday, literally as the S&P is breaking below and closing below its 200-day moving average for the first time in about 10 months, we've got OKE actually breaking out to a new swing high on stronger than average volume. So one of the other things we can do to try to identify opportunities is look for stocks that are breaking out while the market's breaking down. This indicates or that suggests there's something particular to this company or this group that is drawing in some capital, and so I think that's pretty helpful. By the way, I should also note here at the bottom or here in the middle, this widget, I've got some great AI tools that actually can summarize things like guidance and earnings growth. So EPS Momentum is built on earnings. We're going to get to some earnings ideas here in a moment. But I just want to point out, as a technical analyst, I have found it's most helpful. I'm not going to, flip through a bunch of quarterly financial reports to dig deep into the weeds on OKE's business model. But that doesn't mean I don't find a ton of value in having a platform like this sort of summarize the things I should know about guidance, right? If you know nothing else about the potential growth drivers for this company or this group, this is what we need to know. So I like the fact that it's able to summarize that in an easily digestible way, sort of drawing out those key factors, just so I understand a little bit more about these companies. They're not just tickers. There's companies trying to grow earnings and continue to demonstrate some positive growth. By the way, if you want to learn more about this platform that I'm using, it's called EPS Momentum. They've been great partners to Market Misbehavior, and we're really excited to work with them a bit here. And I'm have enjoyed a great deal sort of digging into the platform, talking with Alex, who's one of the co-founders, and digging into some of the nuances and also providing some great feedback, which they've been very open to as well. You can go to my link, marketmisbehavior.com/EPS, to learn more about this platform. You can actually get a great deal on a new account. If you want to check it out, they have free trials available, so it can be a great way. I think you'll find if you dig into it, there's a learning curve, as there is with any great platform, but once you get into it, I think you'll be hooked pretty quickly, especially when you start to surface some of these interesting ideas. And if you do go to that link, which you all should, marketmisbehavior.com/EPS, I would encourage you to go to this little get started widget. I learned a ton from going through these fantastic tutorials that Alex and the team put together to help get you started. All right, last thing I'll share with you is we talked about strong charts. That's called timing momentum. We talked about price and volume components. That's called power days. The third thing is earnings momentum, right? And I was taught in my years at Fidelity, price follows earnings, right? So if we can get the earnings right, overall we're going to be wrong or right more than we're wrong, and that I think is generally a pretty good way to think about things. So similar to the timing momentum model that looks at a bunch of price-related characteristics, they've also designed an earnings-related model called earnings momentum, where we can actually measure, strength in the company's financials. As we can see here, we're looking at earnings, sales, profit margins, free cash flows, and they combine those into a momentum factor based on earnings and how they're improving over time, and really the potential for future earnings growth more than anything. Two names that score pretty well. I'm using the earnings momentum model. I'm just looking at the S&P or the top 500 names just to start with a workable list of large names I'm sure we're all going to be pretty familiar with. Teradyne came up pretty good. This is obviously in the technology sector, and the two I'm going to share with you are both technology names. But what earnings momentum is looking for, to zoom in here a little bit, is looking for this. We're looking for companies that are starting to improve their earnings trajectory and present an opportunity to grow future earnings, right? And so that's what we're trying to focus in on. And these are names that score pretty well based on that model. When I bring up Teradyne, I can see it's actually a pretty good 1-2 punch of strong on the earnings side, strong on the trend side or on the timing side. I've come to really enjoy this widget that combines the two in a very easily digestible format. Now, the stock's pulled back a little bit. What's interesting about the chart of Teradyne, by the way, is a classic candle pattern. This is called a bullish engulfing pattern. Big down day, big up day. We're starting to see a little bit of chop here around once we hit that bottoming point. This is around 260, 265. We've sort of chopped around the last couple weeks, so this has been stalled out along with a lot of other stocks that are sort of in a bit of a pullback, but it's still a short-term pullback within a long-term uptrend, right? And if we look at the longer-term trajectory, right, we were pulling back within a pretty decent long-term uptrend. We can see that earnings momentum score around 31, and that's when they last reported earnings for Q4 of 2025. So overall, the trend has generally been positive. Overall, the earnings has been strong. It's consolidating, right, which means we're pulling back within the uptrend, but potentially an interesting setup here if it can hold key support. Dell's another one, and Dell actually popped up on the Power Days list because it's a potential power day here with a big gap higher. Yesterday was a big move. This is a bullish engulfing pattern similar to the previous chart of Teradyne. We have a down day and an up day. Look how that's followed through with the gap higher. Both of those days have had stronger than average volume, which is why we see the P there representing a potential power day. Obviously, the volatility is a little higher than normal, but what isn't here in March of 2026? But looking at the earnings-related model, scores well on the earnings side, scores well on the trend side. When we zoom out, we can see that this is a stock that's actually testing some key resistance. And we're gapping higher, which is encouraging. My question would be, do we have enough momentum to get above this key resistance level? So I might be setting alerts just above those highs to see if we can get a valid breakout. So if I've missed the move already, or I've missed the move so far, maybe this is right at the point where I'd start to consider adding it to a portfolio. But what's encouraging is price tends to follow earnings. The earnings have been strong, which maybe gives me confidence this is higher likelihood than others have continued to follow through after those positive power days this week. So there you go. Those are three ideas on how to identify some potential opportunities in a period of market weakness. We talked about stronger trend using what's called the timing momentum here on EPS Momentum. We talked about breakouts and how we can look for breakouts on higher volume, what are called power days. Then strong earnings. And again, price tends to follow earnings. So always helpful to make sure we're comfortable with the earnings and focus on those names demonstrating some strong earnings potential. Again, to find out more information about EPS Momentum, I want to thank them as always for being a great partner to Market Misbehavior. You can go to marketmisbehavior.com/EPS. In the meantime, I wish you much investing success. Good luck with all of this going on in the markets. I hope you can use tools like EPS Momentum to make some better informed decisions going forward. My name's Dave Keller with Market Misbehavior. Remember, it's always a good time to own good charts. Take care, folks.